Happy New Year from HKIBC and welcome to All About Money. I'm Chloe Feng. 2022 was a rather bleak year for the Chinese public as the zero-COVID policy badly damaged the economy. But hopes surged when Beijing dismantled its harsh COVID rules while aiming to reconnect with the world in early January. The U-turn caught many by surprise and sent demand for international travel skyrocketing. But several countries introduced travel caps for travelers from China, where a surge in infections is disrupting business activity. So how will China's reopening affect its economic rebound, and will it manage to revive sectors that took a hard hit? Hong Hao, chief economist at Grow Investment Group, joins me to analyze China's road to recovery. So welcome to the program, Hao.
Good to be here.
Thank you for speaking with us. And first, I still want to briefly review about the tough year in 2022 in China. You know, we have the supply chain disruptions, property rules, weakened consumer sentiment, and high jobless rate, as well as export decline and reduced reserves. But now, as Chinese authorities are finally abandoning its zero-COVID policy and aims to reopen borders in January, do you think we can say that the worst has passed in China?
Pretty much so. I mean, for the Chinese market, yes. I mean, this is one of the worst years in history for Chinese equities, right? So, I think, with the reopening and also, with all the stimulating policy they're introducing now, I think more likely than not, the Chinese equity market has put the worst behind it. I think, going forward, as the economy recovery continues, then I think the Chinese equity should continue to rebound from here.
But speaking of the recent COVID easing, how would you comment on the timing of the scrapping of quarantine from early January? I mean, is it in line with your expectation?
No, I don't think it's in line with anybody's expectation. Nobody was expecting them to abandon the COVID zero policies just suddenly. It's almost like a U-turn, right? So, and then also, within a very short time window, basically we go from COVID zero to fully open within a matter of weeks. I think this is the fastest reopening we've ever seen, considering the Asian countries' experience. It remains to be seen, like how you manage the strain on healthcare resources, how the cases, surge of cases is going to disrupt supply chain and production, right? So it remains to be seen. Now it's still early days, but we've already seen in some of the major cities, the infected cases percentages are like more than 60% of the city's population. So I would say that, going like this in one go, because no one's ever seen it before. So it remains to be seen what kind of effects it has on the economy and also, on the people as well.
How long do you think it might take for China's economy to really rebound with the new measures, the dropping of the quarantines and also the reopening measures?
To be honest, nobody knows. But if you look at the Indian experience in 2021, right? So it takes 6 to 8 weeks for the infected cases to reach its peak and then die down, and then there's another second wave, a few months down the road. But the second wave tends to be more tame than the first wave. So then the Indian economy was affected as well. So it remains to be seen, how long you can climb out of this hit hole. But I think right now, the healthcare system is being overwhelmed.
Right. And I'm also thinking, do you have any forecast for the China's economic growth for 2022? And do you also have any forecast for 2023?
22 is already behind us, right? So I think 3% or less for this year. Next year, people were going for 5% or so. So I think if we manage the situation well, so we emerge after one quarter then I think going into the second quarter next year, then we should see signs of recovery, in terms of economic growth.
And also on the equity market, I know you briefly mentioned a bit, and we know that it's a brutal year for the financial market in 2022, as global equities lost 1/5 of their value, marking the largest decline since 2008 on an annual basis. I mean, so far, before the China reopening measures, there were a lot of speculations that sent the sentiment pretty soaring up. But now, after the announcement of the reopening measures, it seems that the market didn't react that dramatically. How would you comment on the major indices so far?
Well, the market always anticipates, what's going to happen next, right? So the market start to rebound on the 1st of November, pretty much around that day. And since then, the Hong Kong market is up 30% plus, and I think the internet stocks is up 60%. I think the Chinese equity is up like 10, 12%, from the bottom to the top of this rebound. So you can't say that the market is not responding, right? So the market responded, but before the actual news announcement. So it really pays to sort of anticipate news flow at this stage. But I think by now, everybody should be clear that the direction of reopening is very, very firm and clear. Right? So over the next couple of weeks, you're going to see surging COVID cases, opening up the healthcare system. Maybe the death toll is going to rise as well. So then, all of these things that we have to go through, it's a tough, rough patch, before you can really take off. So I think, for the Chinese A-share, the Shanghai Composite, we have a target level of 3,500. And for the Hong Kong Hang Seng Index, we have a target of 23,000, right? So it's about 15% from here. And, it's quite likely that we're going to get there sometime next year. And once we get there, we'll look for chances to revise up our targets.
What are the sectors you would suggest investors to look into in 2023?
Well, normally, in a reopening environment, then you should see cyclical sectors outperform, right? So the early cycle sector outperform. So energy, commodities, emerging market, Chinese currency denominated assets, Hong Kong, and I think gold, they're going to outperform, but not immediately. I mean, we've already rebounded so much in a very short time frame that the market is poised for a pause, and then after consolidation, then it will resume its recovery trend from here.
What about for example, travel-related shares, or let's say the pharmaceutical shares? What do you think about their outlook in 2023?
Well, healthcare is already rebounding very strongly, right? So people are anticipating demand for healthcare and for drugs. They're going to surge, right? So therefore the sector has already been rebounding. I think for travel, from international experience, travel sector tend to recover as well. Right? So I think that those are the sectors that's already rebounded very strongly. So I won't be surprised to see that as the peak of the COVID cases starting to subside, then you're probably going to see more upside from here.
And also about the tech shares, we've seen the very tumultuous ups and downs this year. It has big gains, but also big losses. What do you think about their performance for 2023? Particularly those internet giant companies. For example, authorities are signaling that they are planning to wrap up its investigations against those internet companies. So do you think there will be a very robust rebound from the tech shares in 2023?
It's not investigation per se. I mean, it's about how they're trying to regulate large platforms to limit the monopoly power that these platforms has been exerting on small vendors. So all these anti-monopoly cases has already been closed, fines already been imposed and paid, and now it's time to move on. So I think they're recovering from a very low valuation level, and I think they're up. Just now I said up 60%, but I think we should see these shares as a group, more than double from the bottom in the next 12 months.
And what about the broader picture in the Asian equity market? I mean, how would China's reopening also affect the broader picture in the Asian market as well?
Obviously, it's coming from the Chinese demand, right? So, Chinese demand is gonna recover, as COVID cases start to subside, right? So then, people start to consume again, start to spend money. So then it will complicate the picture for the neighboring countries and also for the US as well. Because at the time when you're trying to ease as your US economy is slowing down, the Chinese demand is going to push up inflation. So it's going to make it complicated for the Fed and also for neighbors.
Hold that thought, Hao. We'll take a short break for now, but coming up next, we'll have more discussions over the outlook of China's economy in 2023, so do stay tuned. Welcome back to the second half of All About Money on HKIBC. I'm Chloe Fong. Joining us on this special New Year episode to share his insights over China's economic recovery is Hong Hao, Chief Economist at Grow Investment Group. So it's great to have you today, Hao, and thank you for being on our show. Earlier, we have talked about the reopening's impact on China's economy and the equity market. And now I would also like to shift our focus on the outlook of the other main drivers for the economy. And earlier in December, the central government also conducted its annual Central Economic Work Conference, setting priorities for 2023. Stabilization of the economy was once again highlighted, as authorities also aimed to stimulate demands. I mean, from your point of view, what were the highlights from this conference? What would you suggest investors to closely, follow up in terms of guidelines?
Well, normally when you have a period of slowdown, right? So the World Conference tend to emphasize on steady growth, and also, to a certain extent, stimulating the economy back to the growth trajectory. So, not surprisingly, this World Conference, has an emphasis on those two things, and I think, next year, next March, we'll have the twin session. Right? So the twin session is going to set the tune for next year. So then we're going to see probably more detailed policy implementation. People open for some consumption vouchers being given out to the public, so as to stimulate demand. So this is sort of a recipe that the Western government had used before, and it seems to work. So things like that, very detailed stuff. So I think the theme is really to re-stimulate and regrow.
Right, and from the conference, it also stressed, to boost consumption on housing, new energy vehicles, and elderly services. So would you say that these industries will see steady growth next year with the new guidelines? And what else can be done to further boost domestic demand? Because now we're also at a pretty tricky situation where both internal and external demand waned following the previous COVID restrictions, and externally the high inflation environment, isn't it?
Yeah, I mean, we are using Keynesian economics, to stimulate the economy, right? So Keynesian economics focus on the demand side of the equation, but then at the same time, there's a supply side as well, right? So, if you build, people will spend. Basically that's the idea. I think in 2017, 16, and 17 we had supply side reform, so which the aim is to reduce excess capacity. And right now, people are not consuming, because if you look at the PBOC survey, the income level and then also the confidence about future is at all-time low. Right, so when things like this happen, people tend not to spend. Right, people want to save up, right, for rainy days. So it really need to reinstill confidence into the economy and also grow people's income. Right, so if people are not earning much, then they can't spend. So basically growth is the center focus of this stimulating demand. So then once growth comes back, people start to earn money, then they can consume. So it's a no-brainer, but it takes time, right? So just like I mentioned, right? So for Hong Kong, right? So we're giving everybody like 20,000 Hong Kong dollars.
Right.
And people go on and spend it, right? So I think it really helped this economy. And I think for mainland, we can try more or less the same, but then there are many sort of hurdles that we have to jump through, many technical difficulties that we have to jump through. And also we're talking about 1.4 billion people, right? So in a huge country. So it is more complicated than what we're discussing here, but I'm pretty sure that the leaders know what to do more than ever.
And another major concerning issue would be the property sector. From the conference, the central authorities also defined it as a pillar industry of vital importance to China's economy. And previously, you also have seen the rotten tail buildings, rotten tail projects. And it's not only from the housing sector, it's also about other, for example, industries in relation to the property sector, the upstream and downstream industries. So in one of your reports, you said that the property market situation in China that we are seeing right now is very similar to the one back in 2013 and 2014. I'm thinking, can you elaborate more on this?
Yeah, well, those are the years, before this year. Those are the worst year in the Chinese property market history. So those are the years, when you try to clamp down on speculation, and therefore seeing property sales going backwards. For the entire 2014, property sales has been declining. So it took a year for the sales to recover. Right, so now we're actually worse than that. So we're much worse than 2014, but that's why we're seeing stimulating policy to the extent that it haven't seen before as well. So, but how effective they can be, and how the sector is going to respond to this policy is remain to be seen. But for now, the policies are cushioning the downside of the sector.
So far, authorities have issued several supportive measures to beef up sentiment, including the credit support, lending more money for the completion of unfinished apartments, and also there were the adjustments on the property purchasing limitations. I mean, do you see the property sector will be propped up next year under the current measures? What else can we expect in terms of policies in 2023?
Well, we're doing all we can, right? So we're cutting interest rate, RRR, cutting down payment, removing the limits of the number of property you own now, before you can buy another one, right? So we're removing a lot of restriction, and also we're giving favorable policies for the hukou, for people who come to live in the city. Right, so the policies are really strong now, but keep in mind that the market needs to see marginal improvement rather than you see what I mean, right? So it is an incremental change to the sector. So as long as the direction is clear, as long as we're starting to see incremental change for the better in the sector, then it's okay. So we don't have to wait until the sales climbing all the way back to the level in 2021. Before we can say, oh, it's recovered. It's not going to work that way. I think the sales that we did in 2021 is probably the peak sales level for many years to come.
And in 2022, we've seen the capital outflow and the weakened Chinese yuan following the Fed's and PBOC's policy divergence. China's central bank said that U.S. dollar appreciation has reached its peak with limited upside. I mean, do you agree with this view? Do you think that the US dollar has peaked?
For me, the US dollar has peaked, right? So the US dollar cycle tends to last for 10 to 17 years, right? So the 115 level that we've seen on the US dollar index this year in October is likely to be the peak for this cycle, right? So, but then, as you know, even the dollar has peaked in the next couple of months, because inflationary pressure, disruption in the supply chain. So the strength can persist, right? So it's gonna linger well above 100 for some time, before it eventually comes down. So when you talk about a dollar cycle, a currency cycle, you have to be very careful. We're not making daily or weekly recommendation, right? So we're measuring a cycle, a currency cycle, in a matter of decades.
And how would you forecast the Chinese yuan's performance this year? I mean, we're seeing there's already a rebound from the Chinese yuan appreciation. How much more appreciation could we expect this year?
We're expecting it to go down to below 7, well below 7. Right? So now we're at 6.98, so very close to 7. So we should see it below 6.8. In the course of next year. I think 7.4 is the weakest point for this cycle as well. But it shouldn't be a surprise to anyone, because the dollar is opposite, right? So the Chinese currency, the opposite is the dollar, right? So if the dollar is going weaker, then the Chinese currency should go stronger.
And also on the investment side, particularly the foreign investment, previously there was a foreign firm exodus phenomenon that we're seeing and probably still continuing due to previously the COVID rules and other factors. But now that China has dropped its COVID rules and it is reopening its borders, do you see we could see a return of those foreign firms or foreign investment in 2023?
It takes time for the confidence to rebuild, but I think one should be confident that as long as business opportunities are good here, then one shouldn't be surprised to see the foreign firms comes back, right? So over time, you still have to have allocation to the biggest country in the emerging market and also second largest economy in the world, right? So it's very difficult to fathom how you not allocate resources to this part of the world. So as they're gonna come back, but it takes some time.
And looking into 2023, what would you suggest investors do in terms of their investment strategies to navigate through this uncertain climate?
Continue to invest in the future. You have to believe that the future is brighter than today. You have to keep your optimism up, right? So investment is really for optimists. Otherwise, people just buy bonds or just stay in cash and spend it all. So if you invest, you choose to believe that the future is brighter, growth is going to come back. Your investment today is going to give you return tomorrow. So those are the things that we have to keep faith in our heart. So 2023 shouldn't be a different year for everyone in the market.
Thank you very much for your thoughts, Hao. Appreciate your time. That's Hong Hao, Chief Economist at the Grow Investment Group. And thank you for watching All About Money. We'll be back on HKIBC next Sunday night. Until the next time, please have a good night.